Hi, and greetings from UTI. Financial services sector is the backbone of any economy and will continue to play a significant role in fulfilling India's aspiration to reaching the $5 trillion mark. Today, financial services include different businesses of life and general insurance, banks, NBFCs, asset management companies, broking firms, fintechs, and many more. A key propeller of economic activity has been credit. Over the past 2 decades, lending in India has grown at 1.5 times the pace of growth of the economy. Nonetheless, we have still reached penetration of credit to less than 40% of the households in the country. Banks have been the lead provider of this fuel to the economy. Within the banking space, we have public sector banks and private sector banks, defined by their ownership. We at UTI present to you an interesting idea in the banking space, specifically focused on private banks. Private banks have, and more so today, exhibit very healthy financials. Their return on assets, net interest margin, and return on equity are much better when compared to other players. They continue to grow rapidly with a share of 35% of the deposit market and a 40% share in all outstanding loans. With decadal lows of gross and net non-performing assets and 17.5% capital adequacy ratio, they have strong balance sheets and are well capitalized for future growth. Today, private banks, as represented by the Nifty Private Bank Index, trade at a discount of over 40% to their historical PE ratios, making it an interesting investment opportunity now. So let's understand the Nifty Private Bank Index. All private banks within the universe of Nifty 500 are considered in creating this index. Top 10 private banks are selected and weightages assigned basis their free float market capitalization. The portfolio is rebalanced twice a year at the end of September and March. Today, the Nifty Private Bank Index offers 10 biggest names in banking, namely ICICI, HDFC, Kotak, Axis, Bandhan, City Union, Federal, IndusInd, IDFC, and RBL. Over the long term, the Nifty Private Bank Index has significantly outperformed other indices like Nifty Financial Services Sector, Nifty PSU Bank Index, as well as the Nifty 50. Similar outperformance has been observed even in daily rolling returns. We at UTI are delighted to present you an opportunity to participate in the leading private banks in India through the UTI Nifty Private Bank Index Fund, a first of its kind index fund that gives you an exposure to 10 leading private banks in just one fund. UTI is a leading and dominant player in index funds. We are one of the largest asset managers in this category with over 34,000 crores in AUM across 13 different index funds. We have over 2 decades of experience in managing index funds with efficiency and cost effectiveness. With a combination of robust systems and stringent processes in place, UTI has a track record of one of the lowest tracking errors and tracking difference in the index funds we manage. As I sign off, I encourage you to sign up for the new fund offer. Happy investing and thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.